good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Vinny Motiwala. And for now, the markets are heading for that all-time high level, 21801.45. That's the all-time high level as far as Nifty is concerned. And we're almost there. We did touch the mark of 21,800 on an intraday basis, but scaled below that mark. For now, we're less than 10 points away from that all-time high level. Having said that, today it's the public sector entities that continue to gain ground. So a lot of public sector banks are also doing well for themselves. The top contributors at the index level include names like ITC, Infosys and TCS. So these are some of the names to watch out for. Autos, however, are on the back foot today, taking a bit of a reverse gear after the December sales report is not too impressive. There is weakness across the board. Seems like a miss coming in from everywhere. So that's the latest as far as back home is concerned. But important international news also coming in from Japan on account of that earthquake and now tsunami warning.
Absolutely, so we're seeing some harrowing visuals actually coming in from Japan at 7.4 magnitude earthquake that has hit central Japan. The Japan Meteorological Agency issued a tsunami warning thereafter along the coast of Ishikawa and Niigata and Toyama. Now, the latest reports are suggesting that the first tsunami waves as high as 1.2 meters are 4 feet have hit the Ishikawa coast. Now, according to agencies, a tsunami of up to 5 meters high are believed to be reaching other coasts, and a Japanese Prime Minister has asked citizens to follow evacuation orders closely and warned that more powerful quakes and tsunami waves might follow the initial one. So, yes, that's the update coming in on the global front, and that is something that, is a bit of a worry coming in from
Japan. Not the best of the news to start the year with, right? You would expect some cheer, something interesting, but it's just sad that there is this kind of calamity hitting on the first day of the year itself. But here's hoping that there's not much damage, and hopefully the impact of the earthquake and tsunami remains very, very limited as far as the loss of lives, etc. is concerned. But coming back to our own markets, a lot of action there as well. We are for now, fortunately, not facing any tremors as far as the market move is concerned, because 21791 is where we are at. Important news flow for Gujarat Gas, wherein the gas sourcing cost has come down for the company. Cheaper gas compared to propane is beneficial for Gujarat Gas because propane is a bit of a competitor for them. So that's the good news coming in, that if Aramco is actually hike the price, it will make Gujarat Gas product a little more attractive versus the other. And that's the reason you are seeing a spike, because as it is, we have seen the volatility in the gas price has been impacting the volumes quite a bit. But now at least there is some sort of sanctity there. But shifting focus as to what other stocks and news are there, Dalmia Bharat, that stock is in focus after Motilal Oswal has picked one stock as one of their top bets for 2024. Remember, earlier they had picked out Coal India and GAIL as well. And both of those stocks are actually continuing to gain traction today as well. So all of these MOSL top picks are in focus on account of that. They're reiterating buy with a target of 2,800 on Dalmia Bharat, optimistic about company's long-term outlook, and those graphics will come up for you shortly on the screen. HPL Electric is the other one, wherein ICICI Direct has recommended a buy with a target of 305. They say that the company is well positioned to witness healthy growth, and they're expecting revenue to grow at 20% CAGR for the next few years. You also have Fortis Healthcare, which is in focus. Nomura maintains a buy. The target price now stands at 475, and a lot of things coming together for that one as well, because there are levers in place for margin expansion. So that's the other stock that we are watching out for. But time now to go to our technical experts and take their top recommendations as well, Vinny.
Absolutely, time, and let's bring on board our technical experts for today. We do have Kunal Bothra joining in with us, as well as Naresh Mirani. Very good afternoon to all, both of you all as well, and good afternoon to you as well, Anisha. And I just want to clarify, it was Dalmia Bharat that we were talking about. At one point we did flash Dalmia Bharat Sugar. It's Dalmia Bharat. That's at around 2,380 rupees. That's the stock we were talking about as well. Okay, so let's go to you, Kunal, first. And Kunal, in terms of what we are seeing in a move today that has come in is from JBM Auto. Look at the up move that we've suddenly seen coming in this stock as well. Market surely have seen a recovery right now, but these individual stocks are seeing a sharp up move. So what is it that you are seeing in terms of JBM Auto? Anything specific in terms of charts?
So yeah, I think the price volume breakout for the stock, it's come out of a major resistance. I think the previous August or September highs for the stock was around 1570, 1575 mark. That's been taken out for JBM Auto. and the stock today has shown some good surge of volumes as well. I think if I'm not wrong, the volumes are already at a 3-month, 4-month high for the stock on the spot levels on the NSE so far, which means that potentially the stock should continue to move up higher. So I think it's an encouraging chart, and with the kind of gap up opening the stock has shown today, and potentially closing at much higher levels than the opening side for the stock, indicates that there should be more follow through momentum for the stock.
Okay, point taken. So that's a follow through that we're expecting on JBM Auto. But let me take it across to Naresh as well and talk about a few other counters buzzing around. You have Bank Nifty actually, which is surging as we speak, 110 points higher, 48,400 on that one. And from the frontline index, it's ITC, TCS and Infosys all showing good gains. Naresh, tell us what are the large caps you're betting on right now?
So ITC looks promising because the stock has been sideways compared to the rest of the market. So the stock was at 470 back in July, August of this previous year. So the stock has gone sideways for the last 3-6 months. We've seen a breakout in the last 2 sessions. Could slowly reclaim the highs made around those 500 marks. So ITC looks promising. Then in the large caps, ICICI Bank looks pretty promising because that's a stock which is testing that 1,000 support and trying to make a comeback. Good risk reward here. The last highs for the stock was around 1,000. So a good retest and a re-entry point. So ICICI Bank and ITC out of the heavyweights look promising.
Right. Let's also bring on board Pashupati Advani joining in with us on the fundamental expert side as well. Thank you so much, Mr. Advani, for joining in with us this afternoon as well. And firstly, Happy New Year to you since we are talking to you today for the first time. Let's talk about a bit in terms of, if I want to understand one, in terms of the markets, we're seeing a bit of, after a subdued move, we're seeing the Nifty almost touching that new all-time high level. So yes, that's interesting. But in terms of any specific thing that you're looking at overall in the auto sector that you would find attractive? You're seeing the numbers coming in, not much of an excitement, but anything that you would pick point or find out that is attractive right now there?
I'm actually not so wild about the auto sector as most others. As you mentioned earlier in the show, it's a question of December numbers not being so great. And it looks like people are, you go to dealers now, they are promising you cars in February, March, which means there is stock and there is stock coming. And so they're going to be able to deliver, whereas a little while ago you were waiting 6 months for a car. So I think that's probably not so great for the autos and the auto ancillaries. But you mentioned the market leaders that are actually taking it up. I kind of agree with Naresh about ITC. It's been not doing very much, and it's glad it's an index heavyweight. So it's good if it's going to be finally moving again. And I'm not as bullish on the IT sector and Infosys in particular. But I guess it's being pulled along as one of the index heavyweights. So those are my brief thoughts about big gaps and the new year.
And we'll scratch that point further with you, but let me just complete the point on autos first and go across to Shrishti to get the report card of the data which is out till now. Shrishti, take it away.
Well, yes, for majority of the companies, it's a bit of a disappointment coming in from the likes of Bajaj Auto, Eicher Motors, as well as if we talk about Escorts and M&M, they have disappointed. But amongst all these numbers, the tractors seem to be the weakest link amongst all, where we have seen a double-digit decline coming in, because this is exactly what we were highlighting. But the companies have even disappointed on that front by showcasing numbers weaker than expected. When we talk about Escorts, then there is a decline of 45% on a month-on-month basis, and similar sort of a decline is what we have seen for M&M tractor division, and the companies do tell that the slowdown in the rural sales as well as the kind of a deficit rainfall that some of the parts in India has witnessed has definitely impacted the sales data for the month of December for the tractor division. From Bajaj Auto, from the two-wheeler space, a bit of a moderation coming in on this front as well, because on a month-on-month basis there is a decline of 19%. From the commercial vehicle segment, this segment definitely stands out, because as of now we have Eicher Motors VECV numbers which has surprised us, because that's a jump of 55% on a month-on-month basis, and with this we will be definitely looking out for numbers for Ashok Leyland as well as Tata Motors commercial vehicle segment. And lastly, from the passenger vehicle segment, Maruti Suzuki numbers were expected to be weaker, and around 16% decline on a month-on-month basis is what we have witnessed. But M&M surprisingly weaker set of numbers coming in for their automotive division. There is a decline of 15% on a month-on-month basis. So quite a mixed set of numbers coming in from all these auto companies. More numbers are expected, but key to watch now will be the commercial vehicle segment. How Ashok Leyland and Tata Motors perform in the month of December. Back to you.
Okay, thank you so much for that, Shrishti, and thank you so much for giving us that update in terms of what the numbers are looking like. Not much of an excitement that has come in. As of now, look at Nifty also, auto also, nothing exciting there. Naresh, let me come to you. Anything that in charts, you think that from the auto or auto ancillary pack is looking attractive right now, or something that you would look to buy right now?
So, starting with autos, the most interesting name right now in terms of risk reward is Maruti Suzuki. The stock has gone sideways for the last almost 3-4 months. It's at the lower end of the range, 10,000, roughly being the lower end of the range, 10,800, the higher end. And this is where it has been for the last 3-4 months. And the stock was last at 10,000 back in 2018 a couple of times. Tried to test that in 2023 also somewhere in June, July. And that is the price point it is available. So a good retest risk reward wherein you have a 3-4% risk. And if this plays out, we could again go back towards 11,000 and then towards 12,500 as well. So in terms of autos, as of now, Maruti looks interesting. Hero MotoCorp is interesting, but the stock has already moved up 25% in the near term. So would wait for a dip there, but Maruti looks interesting. Then in terms of auto ancillaries, two names which have been sideways for the longest time, have been a relative underperformer and showing breakout in the last few weeks has been Endurance Technologies and Varroc. Both are setting up for multi-month, multi-year highs. So Varroc looks promising. The last time the stock was at 500 was back in 2019. So it's a 3-4 year breakout and consolidating above the breakout level. So I'll go with Varroc and Endurance in the auto ancillary pack.
Thanks for that. But the stock which is showing a big breakout right now is Gujarat Gas. We were just speaking how that stock was up 3-4%. Now it's actually managed to gain 6%. What's the news flow and what exactly is the impact? Somit is joining us with all of that. Hi, Somit.
Well, if you see the important news coming in for Gujarat Gas is the fact that Saudi Aramco has increased the propane prices by around $10 per metric ton to around $620 per metric ton. Now, because of this increase in gas prices, what is happening for Gujarat Gas is that the propane landed price of propane in the Morbi region also increases to around 46 rupees per unit. Now, this is as against the gas sourcing cost of Gujarat Gas, which stands at close to 39 rupees per SCM. Now, given the fact that the gas sourcing cost for Gujarat Gas is lower, this means that there could be more volume shift towards gas from propane. Now, given the fact that propane is still expensive by around 7 rupees, the margins for Gujarat Gas could also be healthy. So, a couple of tailwinds coming in for Gujarat Gas. First is a more volume shift with reasonable and strong margin coming in for Gujarat Gas. Now, earlier, if you remember, because of cheaper propane, a lot of gas volumes had shifted to propane, but this could now shift going forward. Now, the new prices that Saudi Aramco has announced will be applicable in India from the 1st of Feb because there is usually a 1-month lag period. But this definitely gives in a clear visibility that if gas prices continue to remain lower at around $11.5 per barrel and crude prices also remain at around $76 per barrel, then there could be more volume shift coming in towards Gujarat Gas at stable margins for the company. So that's the reason we are seeing such kind of an up move when it comes to Gujarat Gas in our currently in trade.
Absolutely. That's the reason why we're seeing such a good up move in Gujarat Gas. Thanks for that update coming in. Among the top F&O gainer as well is what Gujarat Gas is doing right now. But also let's mark what the Nifty is doing because yes, a new all-time high for the Nifty. Fresh record high, 21,811 and going upwards there as well. So yes, we were talking about that mark and just a short while ago and we've surely seen that up move coming in over there. We've seen names are really doing well in the last 5-10 minutes as well. A sharp uptick that we're seeing coming in from the Nifty as well. So yes, new fresh record high levels for Nifty, 21,813. Last fresh record high was 31st of December. So yes, there's no stopping the Nifty. Up and away is where the Nifty is going. But on that positive note and fresh record high levels for Nifty, let's just slip into a very short break. Don't go anywhere. We'll be back with more updates after the break.
Welcome back. Fresh record high for the market, 21,814, like the ring of that. But Pashupati, what's the sense that you get for 2024? One needs to be extra cautious, you believe, this year? Or given the fundamentals of the economy are so strong, shouldn't get too worried about this vertigo feeling?
Well, I've always been a little bit behind the curve and a little bit on the conservative side, simply because I believe that there's still a lot of doom and gloom happening outside India, and I'm sure that some of it is going to come onto us. So far, it's been rosy. People have been enjoying. People have been, movies are doing well. Everything, all leisure is doing well. But overseas, what I'm hearing is that people are going out, but the spends are lower. People are holidaying less. Air flights are coming down. So, some of that has to come to us. And it may take 3-4 months. It may take 5 months. But then again, we have our elections, and we're all presuming that Modi ji will come back, and then it'll be off to the races again. But I'm cautiously optimistic. And as I said, we definitely need to be in the strong sectors, which are things like infrastructure, where the government is really focusing. And of course, the public sector enterprises and utilities and banks are also doing well. So those are the ones that one should ride on, and you'll probably make some good money in this first half, at least, of 2024.
Right. Kunal, I want to talk about Vodafone Idea. That has been going up and away. Do you actually, what is the view on Vodafone Idea? Is there anything on the charts that's looking more attractive, or was that just a bubble for the last 2-3 days that we were seeing, and it's going to see a fall coming?
Not a bubble as such, but I think, what happens is, for stocks like Vodafone Idea, these stocks are very erratic in terms of the price behavior, if I can use that word, because for weeks these stocks may consolidate, and for a matter of couple of days these stocks may change the range for themselves. Just as an example, end of October the stock was almost at 10.5 rupees. In the subsequent 3 or 4 days, the stock moved from 10.5 to, I think, 13.5, 14 levels, and then at those 14 levels the stock consolidated for more than 2 months. So this is a regular pattern which we tend to see for many of the stocks. So it could probably happen that maybe for the next couple of days it may move up to 19.5 levels, and then from there it may consolidate for a month and a half. So the best time to try and buy these stocks is when they go quiet, when the volatility drops down, when the price activity is not very steep and sharp, and then wait out for the points when these stocks correct or consolidate. That's a good time to try and enter the stock. But I believe that this is a very strong activity of price volume breakout for the stock, and it indicates that the new trend is in making for Vodafone Idea.
New trend in the making, but one of the old trends which seem to be repeating today is the outperformance of the public sector entities, whether it is those Gujarat-based companies, GSFC, GNC, etc., or the other names like Engineers India. All of these stocks are surging away in the trading session. Even Gujarat Gas, we pointed out, GNFC, GSPL, RCF, and the list is really long. Pashupati, what's your take on the public sector space? Because, of course, 2023 was a re-rating year of sorts. Time to take some profits off the table here, or do you see this as just the beginning of the cycle?
Well, two things I'm seeing with public sector companies. One is that they're all, the ones that are doing well are going to be good dividend payers. And I think that we'll see them declaring dividend in the month of February and March for this year, whether it's interim dividends. I think that's good. We've seen it in the past with good performers like REC. And the other thing about public sector companies is, obviously the government is investing in infrastructure, and they're giving that business to public sector companies so that they, keep it within the family, as they say. And I think that that's a trend that, the public sector is driving the sort of boost in the capital, in the economy, so that it can drive and create jobs and things like that. So obviously one should be bullish on those enterprises. And plus the government will probably sell some off in the secondary market. So, some of them are even looking interesting to buy at these levels, because I'm presuming the government will want to sell at higher levels. And in the same breath, you can look at Vodafone Idea, which is also a quasi-public sector company, because the government has about 30-odd%, which they took in lieu of the debt, around 10 rupees, and that's now worth 17. So I wouldn't be surprised if you see some of those shares also in the market sooner rather than later.
But, let's keep it with the PSU themes and PSU banks. We actually managed to speak to Dinesh Khara of SBI, and they said they're on track to actually achieve that 14 to 15% credit growth, and not much of a worry coming in for them in terms of their unsecured loan, which is coming in from the regulator in terms of the regulating that form as well of unsecured growth. So not much of a worry there, but listen what more he had to say.
Well, I expect that the kind of a GDP growth numbers which we have seen in the first half of the current financial year and if we add the inflation component on that, so it works about to be about 12-13%. So normally we have been seeing that we are growing about 1 to 2% more than what the growth rate in the GDP is, nominal growth rate. So I expect that around 14-15% growth is something which we expect within the bank. So we are on track for that, and hopefully we'll get to see these growth numbers at the end of the financial year too. Hopefully, yes. We are, in fact, for last more than 3 quarters plus, we have shown actually it has been our last quarter we had seen 1.10. So I hope that we should be moving towards the trajectory of 1.20 as far as the ROA of the bank is concerned. There is a conscious effort, and all endeavors are in that direction, and hopefully we'll get to see those numbers also.
Okay, so that's the latest coming in from SBI, but for now it's the Adani group of stocks which are also surging. So in the morning we had seen a spike on Adani Wilmar. Right now it's Adani Enterprises and Ports which is seeing a bit of a spike, so just watching out for these names. In fact, Naresh, wanted your sense, if you had to take one of the top bets within this group, which name comes to mind?
So that would be Adani Ports. That's a stock which has the maximum institutional holding. Plus, it's finally broken out above the 950 mark. So the stock had topped out around 900, 950 back in 2021. Then in 2022, a couple of times. Then even before a few months back, it made a top around 900. So that's the stock which has given a clean breakout and now sustaining around the higher levels. So if one has to take a bet, this looks pretty promising, could slowly and steadily go up. Would look at it as a partial buy right now and add on dips going forward.
Okay. Adani Ports, that's the word coming in from you, Naresh. Mr. Advani, I just want to come to you as well. Would you look at any of the Adani Group names as of now? Anything that you would find that has value that you find attractive?
Holding company and is the one that will participate in all the moves, and that's the one that people have been following. Ports also has got very good cash flow, so I think those are the two that people are looking at, and those are the ones that are actually going to give the performance. Again, as they get more and more businesses out from the government, they will get that extra value, and they do seem to be winners, and they seem to have got a clean chit from the world, so people are back in those stocks. So all good for Adani Group.
Okay, point taken. So that's about the Adani group of stocks. But let's go back to our technical experts to get the closing trade ideas. Kunal, what is the stock that you like?
Yeah, so stock, which looks attractive in fact on the charts on the spot levels is CESC, a stock which I think is now at 136-37 levels. Excellent chart for the stock. It's formed a continuation cup and handle pattern, and I think that looks very attractive, indicative that this could be a start of a big multi-month uptrend for the stock. So would be bullish on CSC.
And Naresh, what's your closing trade?
So that would be a buy on ICICI Bank, which looks the best risk reward at 1,000 rupees. Would expect a bounce back and towards a new all-time high going forward.
Okay, point taken. So those are the top picks coming in. But Pashupati, before we let you go, we can't let you go without a New Year's gift, right? If you had to give us one, which is the top stock you think for 2024?
Well, you're putting me in a box, but I think I'll give you my idea of the top sectors. I think one of the top sectors is going to be telecom and all the telecom ancillaries. So I think those are the ones that will be there because our population is growing, our population is liking data, our population is moving to 5G, all good stuff that is going to actually help the telecom companies and all their providers. So I think that's where the joys are.
The telecom companies which is surging today is Vodafone, but I do guess that you're also hinting at Airtel because that's one of the pure play telecom companies that we have. Thanks so much, Pashupati, for making time and speaking with us. In fact, on that note, let's quickly head into a break. When we come back, we'll discuss more individual stocks and what's passing around with the market sitting the fresh record high level.
Welcome back, and you're watching Closing Trades on ET Now and Nifty. Yes, holding around those record high levels as of now, just slightly below that 21,800. It's what it's managing to hold on to. But let me come to you, Kunal, and let's talk about some other stock specific action. And when you look at some of these consumption names or FMCG names, they're not doing anything exciting. Like today you're seeing some bit of a move coming in for Nestle. It's up 3%. Obviously we're going to be seeing that split coming in as well. But anything exciting you're finding it in the FMCG space?
So there are quite a few stocks. In fact, Godrej Consumers is looking attractive at 1150 approximately where it's trading. Tata Consumer apparently has done reasonably well. ITC, if you can put that also, I think that's also a stock which has done reasonably well towards 470, 475 the last I had seen for ITC. Colgate I think has done reasonably well. So, if you talk of the larger cap names or rather the more formidable ones, HUL, etc., that stock has relatively underperformed compared to the other peers. But then there are many of these stocks which are actually looking very attractive in terms of a breakout. Godrej Consumers, for example, at 1150 approximately, I would probably expect at least another 5 to 7% on the upside. Looking at the way the stock has moved and the stable uptrend the stock has shown so far, even ITC at 470 approximately with the last 3 days of candlestick pattern, first a gap up opening, then a negative candlestick, and today's breakout move indicates that the stock should be good for at least another 20-25 points on the upside. So there are few names which traders can look at buy even at current levels.
Okay, so those are some of the names that you can still look at buying. We also have Ashish Anand joining on the show, but before I go to him, let's hear out what the ISRO chief had to say, because it was an important day. India only became the world's second satellite that has been sent to probably study the black holes as well. 2023 was an important year. We saw the success of Chandrayaan as well as the Aditya mission, and now on the first day of the year itself, we have launched this satellite ExpoSat. Let's listen in what the ISRO chief had to say about it.
ExpoSat is a very unique scientific satellite looking at black holes. Just not black holes, it's also looking at the way in which it emits certain radiations in conditions where it becomes like eating into the other stars. So when materials flow from other star into it, it has an X-ray emission, and this, using the polarimeter of the X-ray emission, the spectroscopy of this, we will be able to quantify some parameters. So this is precisely the objective. It also looks at pair of black holes, also looks at pulsars where high energy X-rays are emitted. And it has two payloads which looks at this behavior at lower energy and higher energy. Two payloads are built by two separate institutions. One is by ISRO and another by Raman Research Institute. So it gives little more deeper understanding of black holes.
So basically the primary study here is about black holes, and
of course about black hole, but it's not just black hole observation. It is to quantify this specifically through this polarimetry. The polarimetry is the uniqueness.
Okay, so that's the study of black holes that we are trying to, kind of do there. So ISRO doing great things as far as 2024 is concerned as well. But back to the markets and the stocks which are buzzing around. We have Wockhardt, which has actually seen a surge of around 11% since the start of the day itself. That stock has been inching higher, and Spark is the other one. Castrol too actually has been a stock we don't talk very often about because we don't see big intraday moves. With the last week and this week, we are seeing big moves on the counter. Today as well, there's a 7% gain on that one. But Ashish Anand is also joining us on the show. Ashish, hi, good to be speaking with you on the first day of the new year. Best wishes from the ET Now family. But what's your, what's your understanding how 2024 will pan out for the markets?
Thanks so much. And firstly, just wishing you and all the viewers also a very happy new year. So we start the year fairly optimistic. What's happened is for the last couple of years, you've had concerns around inflation, interest rates, geopolitical concerns, weak economic growth globally. A lot of these headwinds have basically been taken care of. I think the few things we are really going to be watching over the current year is firstly, I think for the first time in many, many years, you're actually going to see interest rates likely to decline. The Fed is expected to cut rates by up to 3 times over the current year. You'd probably expect to see something similar from the RBI. So as compared to interest rates being a big headwind, it'll start becoming a tailwind over the year. You've already seen FI flows start turning to be positive after, I think, 3 consecutive months of declines towards the end of the year. So that is, so I think from a technical and a fund flow perspective, interest rates declining is clearly very interesting. You're obviously going to have a dual election over the current year, both the Indian elections as well as the elections in the US. These would be important kind of events to watch out. But at least if we're looking at what the state elections have thrown up, it seems like the Indian election should not be too much of a surprise. So I think you have a very strong backdrop for growth. The longer term fundamental story of India is looking very, very robust. I think this has just been accentuated by various steps the government has taken towards boosting the manufacturing, the capital goods sector. China plus one is a very attractive longer term theme. You're seeing real estate revive after a decade of kind of weakness. And the longer term themes in India that have continued to compound well, being it as in the banking and financial space and also kind of consumer, right? All of these are lining up quite well. So we are very optimistic about the markets in this year.
Right, let's pull up the charts for Route Mobile because it seems like there's some chatter going on around that. Today, the stock has managed to hit a 20-month high as well. To get in what the chatter is about, what's the buzz around this counter, let's go across to Sharad, who's joining in with us.
In focus is Route Mobile, and what we are gathering from the dealers is the sustained buying coming in from the HNI segment, as also a couple of domestic institutions. Now importantly, if you look at the volumes also, that has picked up almost 5 times its 20-day average, and the stock has hit its 20-month high levels as well. Now, the key DI investors already invested in the company. As per the recent shareholding, include the names of Abacus Group as well as ICICI Pru Mutual Fund. Now, buzz in the street is that in fourth quarter itself, the company is expected to sign a large order and the deal is expected to be completed in the fourth quarter itself. Apart from this, during the year end and the early January part, there are contract renegotiations also happening, which will aid for 2024 onwards as well when it comes to the timeline. So the stock would be in focus, especially because FIs have also been increasing their stake over the last 3 to 4 odd quarters, and the street estimates that the valuations are still attractive.
Okay, so that's about Route Mobile, but just coming back to the telecom sector, because of course, apart from Vodafone Idea, we also had Pashupati Advani talking about how it could be the standout sector and even the ancillaries to that, the likes of Route Mobile, etc. So, Naresh, if you had to take a pick in the telecom sector and its ancillaries, whether it's Tejas Network or Railtel and the other names, what would be your top bet?
So I would go with Indus Towers, which is a stock which has gone nowhere, and biased here I have a position. The stock has been correcting. It's corrected from 340 levels back in 2021 all the way down to 200, and has seen good volumes over the last 2 sessions. So Indus Towers looks interesting. It's a short-term breakout as well as could be a long-term trend change. So this is a stock which could surprise on the way up. And second continues to be Bharti Airtel, which is a buy on dips. All through, it's been a slow and steady run up. Would not focus a lot on ancillaries as of now because many of them have not given strong breakouts as such. So I would go with Indus Towers, which is the fresh breakout right now.
Okay. Surely, that's the word coming in on the telecom as well as telecom ancillaries as well. So that's very interesting there as well. But, Anisha, what's interesting is New Year's orders. I think we keep ordering every day from these Swiggies, Zomatos, but Kunal, what's your view on Zomato? What's your view on Swiggy? Firstly, did you order this New Year? Because those order numbers were really crazy. 8,400
What was your contribution?
Yeah, how much was your contribution? I think I ended up ordering a couple of times because I missed out on ordering a few things. But Kunal, what was your contribution?
0 orders from
Wow, ghar ka khana?
Ghar ka khana, absolutely. My
Wow.
wife makes tremendous, very good amount of delicious food. And especially Rajasthani
You are
food.
getting, like, I don't know how many brownie points today saying that on the national television that your wife cooks good food.
So it's going to be a happy new year for the whole good new year for Kunal because he's going to be getting yummy food.
We should get this bite card and send to him so that whenever he has the next fight, he can just use this as the getaway card. But you're not getting away from the question of Zomato and the stock price on it.
So apparently Zomato has not done much in the last few weeks. I was actually looking at the charts.
When you started saying has not done much, I was like, what? From 40 it's gone to 120. What are you talking about?
I think in that regards, in the last 1 year, everything has doubled. I mean, most of the mid-cap names have more than doubled and tripled. So I think in that aspect, yes, the stock has done. But I was talking about the last couple of months. I think it's been hovering around this 100, 120, 25 range for the last few weeks. Somehow the momentum has stalled for Zomato, and I think that's a bit of a point, because when you have so much of positive data flowing into the stock price, we actually expect that somewhere down the line, one of these data points could lead into a breakout for the stock. But if that doesn't happen for the stock, then we expect that the stock may get into a range bound action even going forward. So would probably want to wait and watch on the stock, not look to trade the stock at current levels. In case if it drops down and say comes back towards 115 to 117 range, that could be a good point to try and nibble into the name.
Okay, point taken. There's a sharp knock as far as market is concerned. We're just celebrating those all-time high levels. From there has been a complete U-turn of sorts. We have let go of 80 to 90 points in the last 5 to 7 minutes, I believe. Yes, there's a complete nosedive there, and the Bank Nifty too has been turning around. So a very, very sharp knock coming in. Naresh, what do you make of this? Do you think these are led by some of those triggers and those algo trades, etc., hitting fresh high, or what explains this move?
So many a times there is a recheck which happens on ETFs, etc., which generally takes place at 3 to 3:30. So seems like a basket which came on the sell side, or at least more on the heavyweight side of it. We are not seeing a similar downtick across the mid cap and small cap. So such volatility is normal on the last 3 to 3:30 on the last day of the month or the first day of the month. So could be more of a recheck.
Okay, it could be a bit of a rejig, but actually, this is the most consensus call I've heard of late, which is that one needs to churn the portfolio towards large cap and book profits in mid cap, small cap. I know markets can stay irrational for a long time, but time and again it's been proving them wrong. It's only the mid caps and small caps that continue to outperform versus the large caps.
So, that's true. And see, this is fundamentally a very difficult call. What you are seeing is I think the risk-adjusted returns look a lot more comfortable when you're looking at large caps as compared to mid and small. However, you are seeing very strong sentiment and momentum in the small cap space. And while I think there's clear consensus that there is a lot of froth, this froth can continue over the longer term. So not over the longer term, but over the short to medium term, this could kind of continue. So timing when the markets will turn and when large caps will start delivering more than small and mid, that timing is very difficult. But I just think from the danger with investing in small caps at this point in time is that when markets turn, what you have seen historically is that when small caps fall, they can fall very, very sharply and at very low liquidity. So you may not be able to get out. A lot of the gains you're making may just be paper gains, which you can lose quite significantly. So at least from our own portfolio positioning, we are moving more towards large and mid caps. We're only going towards small caps where we're very confident either of the story or underlying valuations. But in terms of will the small cap rally sustain, I think timing that is just very, very difficult.
Right. Actually, I just want to ask you on, and going back to the point of Zomato also, as well as other platform companies as well, whether you look at a Nykaa or a Paytm, what are you seeing in terms of the value there? What is your view on these platform companies? You do have some bit of a holding here.
Yes, so we're very, very confident about the space. But I just want to clarify that in terms of our outlook on the space, we see a tremendous amount of value creation taking place over the longer term. We're talking of over the next 5 to 7 years. We believe going to become leading benchmark kind of companies. They are going to be in key indices, etc. What you are seeing is a tremendous amount of value migration taking away from traditional businesses towards these platform businesses. So we were talking about a Zomato or a Swiggy. It has just become so mainstream to order food as compared to even cooking at home. Now, while this has already caught up a lot, if you're just looking at the current penetration levels and compared this to global benchmarks, we have about 6 crore users, annual transacting users on Zomato in a population of about 130. China has over 50 crore transacting users. Of the 6 crore annual transacting users, only about a quarter actually consuming on a monthly basis. In China and the US, over 50% of food consumption is actually spent on restaurants. In India, this is sub 10%. So, and this is just an example. I'm just talking food here, but you see something similar when it comes to payments, when it comes to the BPC space in Nykaa, across kind of platform businesses. What you are seeing is a very interesting longer-term value migration that can take place. We believe we're still in the early stages of growth for these companies. As these companies continue to grow at very, very attractive rates, and as they turn profitable, as we are seeing clear signs of them doing, we believe longer term profitability is actually well ahead of what markets are expecting or believe that these companies can deliver. And this combination of very strong growth and a shift towards high levels of profitability lay a very strong foundation for longer term value creation. How these stocks will perform in the shorter term is difficult to say, but we run a fund, we look at it as a quasi private equity fund where we're saying near term you may see high volatility, but over the longer term, we believe you'll see very strong outperformance in all these platform companies.
Okay, very confident about the strong performance that you're anticipating there, but there's a bit of a reversal of sorts on HDFC Bank, and on Bharti Airtel is underperforming as well. Kunal, what would you make of this HDFC Bank underperformance? It's again slipped below 1700. Any U-turn in the kind of breakouts that you were anticipating?
So not really. Yes, the stock has gone through a correction, but I think the 3-day swing high for HDFC Bank was around 1720 on the spot levels, and the 3-4-day swing low or the support is around 1678. It's still at the midpoint of this 50-point band for HDFC Bank, almost at the 1700 mark. So we'll wait out for a breakdown below the 1678 levels for the stock to get into any kind of a reversal. As of now, it looks like a profit booking wave across many of the large caps and mid caps. So we'll have to maybe wait out for another couple of days in case if there's any kind of a further selling which happens across the board for many of these stocks.
Okay, Naresh, I'm going to come to you right now. What I'm seeing also is that, large private banks are managing to hold on. You said that, this is something that is very normal when you see a bit of a fall coming in on the last day or the first day of the month as well. But large private banks, that's interesting, right? And we spoke about ICICI Bank before also, you spoke about that. So anything interesting that you would put into perspective for these large private banks?
So in large private banks, it's very clear that there is a stiff resistance for HDFC Bank around that 1700, 1750 mark, which is the price where it was in, say, the day the merger got announced, as well as back in 2021-22. So that's been a tough range. So if that crosses, then it becomes a bigger breakout. But overall, leadership is very clear. You have Axis Bank, which is the one stock which has done well above the all-time highs, sustains well. Second is ICICI Bank, which continues to look interesting. So going forward, I would expect leadership to come from ICICI Axis and SBI, which has given a breakout into all-time highs. Only after 1750 is where you start looking at HDFC Bank as a leader. So for now, at current levels, ICICI, SBI and Axis look promising.
Point taken. So that's the latest coming in on the banking sector. But Ashi, if I had to ask you, apart from the platform companies, which is the other sector that looks strong to you? Because financials, and especially the private banking financial names, are the other set of stocks which are a consensus buy, because fundamentally, if you talk about the credit growth, if you talk about the asset quality, and even the valuation for that matter, it looks attractive. But the stocks just don't budge at all.
So a lot of fund managers, I think, are quite heavily exposed to the space, including us, right? And I think the reason there is such strong consensus in terms of these names is most segments of the market, if you have growth, you're really having valuations being extremely expensive, right? So you're seeing this in defense, you're seeing this in capital goods. Wherever there's a story, you're really having to pay up for the story. And in other pockets where valuations may be a little more attractive, there are clear headwinds. So if you look at pharma and IT, you're clearly seeing those issues there. Now, banking and I think the larger financial services space is, I think, a space where growth is very evident. This is a space that has been able to deliver growth and value creation well over the last couple of decades. And if you just look at all underlying trends, the ability for some of these private banks to continue to compound advances at over 15-20% quite comfortably without any major negative signs around asset quality. It just is a very interesting, consistent kind of compounding story that you're seeing in these platforms. I think what you have seen over the last year is a certain amount of reversal as various parts of, especially capital goods, real estate, defense, started to pick up. You've seen money flow away from what was a clear consensus around banking towards these spaces. But in terms of just the combination between growth, quality, and value, I think clearly financials look a lot more attractive than a lot of the other parts of the market, and which is why even in our portfolios, it continues to be a key overweight.
Sure, but Kunal, let me come to you and just get in your BTST trades for today.
So I'll go with a couple of buy calls. Motherson, Samvardhana Motherson, stock trading at 105, 106 levels. Looks attractive from current juncture. Expecting the stock to get into a breakout and complete this bullish flag pattern for itself. So 114 is a target for the stock, and stop loss could be kept at 103. And Reliance is a stock which has come back to a breakout mode about 2600 levels. So 2650 is the targets which I would certain for the stock over the near term, and stop loss at 2570.
And Naresh, your BTSC trades for today?
So first would be a buy on Apollo Hospitals, showing momentum here. Stop loss at 5730, target price of 5850. Second would be a buy on ICICI Bank with a stop loss at 995 and a target price of 1030.
Okay, point taken. So those are the top recommendations coming in from our technical experts, but also listen in to the views of S. Nareen as to what he has to say about the market mood right now in terms of which are the sectors that look attractive and which are the spaces that you need to be a bit cautious about. Listen in. Okay, we'll try and pull up that bite very shortly because S. Nareen was talking about how PSUs is something that you need to turn a bit more cautious about. There has been a runaway rally, and ditto for the markets as well, because the valuations are not as comfortable. In fact, for some of the mid-cap and the small-cap space, there has been a massive upsurge that we have seen. But coming back to the markets, because the slide is just continuing, Kunal, we have let go of even 21,700. How much credence will you give to this slip?
So yeah, I think it's an important correction so far, but as I was pointing out earlier, that such kind of selling in the last half an hour could be on the back of a lot of things, building of positions, shifting of positions, churning of positions, may not be necessarily associated with profit booking across the stocks and spectrum. So you'll have to look at the data, maybe in the next couple of days. Also, if the stocks which are selling in the last half an hour, large caps, mid cap names, if these stocks are seeing a follow through, so it's a bit too early to try and call that whether this is a sign of a trend. But yeah, such kind of sharp selling was completely absent over the last many weeks of the market rallying up higher. So this also doesn't come as a surprise that somewhere down the line the profit booking has creeped in. Now how steep can the profit booking continue for the indices, that will maybe come to in the next couple of days.
Okay, but like Anisha was mentioning, let's go across and actually listen into what S. Nareen had to say in terms of PSU stocks and power sector as well. Listen in.
In the next 3 years, the PSUs have moved from being one of the cheapest segments to the market to a situation where some of the PSUs are today overvalued. And it is because of the good work done by some of the PSU managements, the way some of the government has also ensured that the PSUs have worked in the interest of the shareholders. But that's a funny thing. In 3 years, they have moved from undervaluation to selective overvaluation in some of the PSUs. And that's very interesting because it is due to the good work of the government, actually. But if you look at the index, for example, the BSE index, clearly we have been much more positive on power within the PSU theme than other areas because we felt that the power generating areas are still more reasonably valued compared to the other areas. And we have been more positive on the upstream areas in the PSU theme because these were the two themes where the price to earnings was much more reasonable than many of the other PSUs. But if you look at the price to earnings of many of these things, and in some of the cases, the price to book in some of the areas, they are not being cheap at this point.
Okay, so that's the latest view coming in from S. Nareen. But for the markets, it's not looking pretty at all. There has been a reversal. But the good news is that the public sector entities are actually managing to hold up. Because if I look at the sectoral performers, it's only PSEs, the public sector banks, which are actually holding up, especially PNB, PSP, Union Bank, these are the names that hold out. And then from the FMCG pack, Nestle continues the up move, and ditto can be said for Emami as well. IT2 is actually doing pretty much okay. Tech Mahindra up 2%, HCL up around 0.8%. I find it a bit surprising, Ashi. I don't know if you agree with me or not, because I don't find the valuations to be that comfortable. They're sitting at more than the 5-year averages, and if you go by the Q3 expectations, they are very, very muted, and even for next year, the companies are not very committal of a recovery. What then explains the up move in the IT stocks that we have seen in the last month or so?
So I think if you look at valuations and if you look at valuations relative to the market, right, I agree valuations would, especially in mid-cap IT, would probably be above 5-year averages. But if you just compare it relative to other parts of the market, you're still seeing a much greater kind of valuation comfort in the space. What now? I agree in terms of the near-term outlook being quite uncertain. You have clear discretionary spends being quite impacted. You saw this in the last quarter. Accenture results, which were declared a couple of weeks ago, didn't seem to indicate any kind of near-term pickup that you're seeing out there. However, what happens is that given the fact that you've crossed the peak of the US interest rate cycle, you've had the 10-year GSEC, which had touched 5%, fall well below 4%. You probably going to start pricing in of looking at a potential revival in terms of global IT demand. And so markets won't really wait for those specific numbers to come in. So I think one of the things over the current year, IT may be quite an interesting dark horse. While there is clear weakness in terms of near-term spends, the longer-term kind of story around increased digital spends, the need to kind of, a lot of enterprises are going to start spending on artificial intelligence. That will have a certain amount of boost in the near term for IT companies. So I think the combination of quality growth and value is quite comfortable in the space. It's probably not going to perform too much in the near term until you're not seeing clearer signs of an economic revival. But I think the moment you start seeing that in terms of global economic demand coming back, I think the space could actually surprise markets on the upside.
Let's wait for that surprise, because for now I don't see many signs of it. But I think those are the numbers coming for you on screen for Tata Motors, and it does look like it's managed to beat the expectations. The CV sales have come in at around 34,180, and that compares with the expectation of 28,593. And this is coming at a time when the rest of the peers have actually disappointed by a huge margin. So in that context, the outperformance of Tata Motors is definitely notable. Even in terms of the domestic sales of the PV, it does look like that they've managed to report a healthy performance versus the expectation. CV definitely is something which is actually perking up. So maybe let's see what the mix has been. Okay, so PV sales are broadly in line with expectations, just a slight bit of miss coming in. But Kunal, what's your take on Tata Motors? Last year you were quite positive. Do you expect this up move to continue? It hit 800. Now are you watching out for 1,000?
So let's look at it, because I would believe that it's better to try and look at this step by step. Such kind of new territory for stock prices are these are uncharted territories. So we'll actually wait out for the stocks to get into gradual uptrend. Now I look at for 5% to 7% as a benchmark for higher levels. So from 800 levels, we could be looking at say 850, 860 as the next target.
Okay, so next 5 to 7% is something to watch out for. But the last 25 seconds of the trading session left. On that note, we let all our guests. We'll thank all our guests for joining us today in the show. But for now, the markets are ending at the